I want to show you this pattern breakdown in crude oil, make you aware of this pattern. I've been watching this, and it's been very cyclical. Crude oil is very cyclical. Kind of a strong uptrend right here. The cycle is really here, 1, 2, and then it pulls back, and this is the 3 area. And so you have this trend line up, and whenever this trend line becomes obvious, you see this potential 4th point here, and it tends to break down. It doesn't, these trend lines, sometimes they last, sometimes they hold, but once it gets to about the 4th point, it becomes more recognizable. Well, then it breaks down. And so the cyclical nature can be destroyed in the markets, and the modern trading, electronic trading, the algos will break down these obvious patterns, and you don't get to buy this third or fourth as much when you see it. It's pretty obvious on the 3rd. Maybe you bought it here and it rolled over, but it's still in the trend line right here. And then 4, it was in the trend line. Maybe you caught it for a little bounce, but it didn't go up here yet. So it broke down. It broke down this trend line, and you tend to see that. You tend to see obvious patterns disappear quickly in the markets, and so I want to make you aware of that. Something that I was watching, and I want to show you the market depth pattern for crude oil. So I'm still bullish crude oil. Last night we've had a sell-off, and so we see that at night, market down, and then at some point it starts to reverse and rally. But you see this big purple bearish signal right here. There is a counter trend move that continues beyond that, and then it sells off. And so the main focus on this setup for me personally is to look for the market to be down, and then for the blues to start taking over, and the market starts to press into the offers, and it can be a good time to capture another rally to the upside. And so that's what I'm looking for. I wouldn't just get in here using the market depth indicator and say, hey, here's a blue signal, I'll buy there, or here's a blue signal, I'll buy there. No, I want the blues to be have more momentum than the purples, and right now the purples have more momentum. And so it's ticking up right here. It could be tempting to come into this 56 area and get long in here. You could take that trade with a low risk if you wanted, but I prefer to wait for the blues to create some momentum and buy it as it rises. You don't have to pick the bottom. You want to pick the point where it starts to accelerate to the upside and breaks away and accelerates to the upside. Even before it hits these highs, you want to try to capture it before it hits these highs. And you want to, you're able to place a tight stop if the market were, let me show you for example, if the market were to, move slowly up here and the blues started taking over, and then you take this breakout and maybe it pulls back a little bit and then it goes up, and then you have a fairly tight stop. You don't have to put it all the way at the lows. You can put in a fairly tight stop if the market tries to start taking out these pivot points. While the blues start to take over, you get the opportunity to get in on a potentially fast move to the upside, a bigger counter trend rally into the overall trend of the market, because the trend of crude oil is still up, even though we're having a pullback today. So that is one technique for taking long trades in crude oil, and one technique to look for, one strategy to get long this market, as I do anticipate 63 or higher by the end of the year, and I'll show you why. So here is crude oil. There was a huge gap up based on some geopolitical news. Basically, there was some of the Saudi Arabian oil production. 50% of them have been shut down. More than 50% have been shut down because of an attack on their oil production. And so this was a Sunday night opening, huge gap up from 55 all the way up to nearly 63, and then the market pulled all the way back to this level below that, and now it's moving higher. And I would anticipate the market to go back up here by the end of the year, if not higher. It's possible that it can go higher, and in crude oil you never know how high it could go. So looking to buy those pullbacks. And if we're wrong, we're wrong. But that's the thesis that I'm working on. If we're wrong, we manage our risk with stops, tight stops, and you know, you can still have winners even if the market rolls over and you're wrong overall. You can still catch some rallies even if the market rolls over and goes down.